It's time for your weekend special shows. You're watching Companynama. To give you all the corporate and startup highlights of the week, I'm Ajay, and over to the corporate world first. The first news is on an IT giant taking a big leap into the future. IT major Wipro has announced setting up the AI 360 service and has also committed itself to invest around $1 billion into artificial intelligence in the next 3 years. Wipro is aiming to unleash an era of productivity and commercial opportunities with the application of generative AI. Wipro informed that the $1 billion investment will help advance the company's AI, data and analytics capabilities and build new consulting capabilities in order to help clients adapt AI and unlock its full value. Wipro has also announced that it will train around 250,000 employees on the fundamentals and responsible use of AI over the next 12 months. In what could be an advancing move for the IT major, fast expanding AI does raise questions over future employment opportunities. Now from an IT giant, we move on to a steel behemoth. Tata Steel, which took over bankrupt Bhushan Steel in 2018, has challenged the Delhi High Court order regarding an avoidance application in the Supreme Court. The division bench stated that Tata Steel cannot benefit from the amounts received, and those benefits of about 1,000 crore rupees should be appropriated to the creditors. Tata Steel is challenging the January 13 order where the Delhi High Court directed the National Company Law Tribunal (NCLT) to proceed with the hearing of the avoidance application, but said the amount recovered can be distributed among the secured creditors in accordance with the law as determined by the NCLT. Speaking of behemoths, Adani will now focus on its niche businesses. Adani Group is planning to sell its 10-year-old shadow bank. Adani Capital and 3 private equity firms are preparing to make their best bids for the NBFC. As per reports, 3 firms, namely Bain Capital, Carlyle Group, Cerberus Capital Management, will make their binding bids in the coming weeks for Adani Capital. The billionaire businessman is planning to exit from the non-core business sector to focus fully on the company's niche areas. Adding to that, Gautam Adani has raised $1.38 billion from stock sales in 3 group firms, bringing the total amount raised over the past 4 years to $9 billion, as the conglomerate attracts interest from a variety of investors. The group may also bid for Vidarbha Industries, promoted by Anil Ambani, and its realty foray is also stuck as the Maharashtra government has not yet given it permission to go ahead with the redevelopment of Dharavi. And this past week, promoters were put on notice by Sebi. Promoters must disclose to exchanges their family settlement agreements or arrangements that have a bearing or influence on management control of listed entities for such deals to remain legal. In its notified rules, the capital markets regulator, Securities and Exchange Board of India, has said that agreements that subsist as of the date of notification are to be disclosed to the stock exchanges. It was earlier understood that only prospective agreements must be disclosed and not retrospective. Sebi said that these rules will bring transparency by bringing out all secrets between parties. The regulator issued a notification on this on June 14. According to experts, the changes are quite broad and are likely to cover all packs. And Foxconn chips in big time with TSMC TMH for chip manufacturing. Foxconn is in talks with Taiwan semiconductor manufacturing company TSMC and Japan's TMH Group for technology and joint venture partnerships to start semiconductor fabrication units in India. Foxconn and TSMC are both based in Taiwan. Foxconn, which ended its $19.5 billion semiconductor joint venture to make chips with India's Vedanta Group earlier this week, has been talking to the 2 companies for some time. It's likely to soon finalize the details of the partnership to manufacture both advanced and legacy node chips. And speaking of chips, let's take a look at foods, but on a rather healthy one. Baba Ramdev-led Patanjali Foods has launched an offer for sale (OFS) that will allow its top shareholder offload 2.53 crore shares of the company at a floor price of 1,000 rupees per share. On the first day, bids were received from institutions for twice the quota, and the retail quota was subscribed 2.95 times at the time of recording. Patanjali Ayurved is the FMCG major's largest shareholder with a stake of 39.37%. The promoter and promoters groups collectively hold 80.8% in Patanjali Foods. Patanjali Ayurved will offload about 2.53 crore equity shares under the OFS or 7% stake. In the case of oversubscription, the promoter may sell another 72.39 lakh shares or 2%. And from food, we go on to childcare. 3 years after it ceased production of its talc-based powders in the US and Canada, pharmaceutical giant Johnson & Johnson recently surrendered its license to manufacture baby powder in its Mumbai plant. The company said that the decision to stop manufacturing baby powder in India was part of a global move to switch from talc-based to cornstarch-based baby powders. Incidentally, J&J's move comes within months of the company winning a court battle against the Maharashtra Food and Administration (FDA) to continue production of baby powder. J&J submitted an application on June 22 seeking to stop the production of the baby powder at its Mulund plant. Speaking of corporates, there were some giants that were surrounded by controversies. Let's take a look on the radar this week. First, can Varia's rescue plan get Go First back in the skies? Varia Group, in a bid to take back the reins of Go First, is looking for partners in order to bid for the airline, even as it struggles to get back to the skies. As per reports, a joint bid for the airline is being discussed by the group with financial investors such as private equity funds and alternative investment funds. Reports have added that the RP issued an advertisement calling for expression of interest to buy the airline on July 10. A final decision will depend on whether the grounded carrier can be considered airworthy again. The report also stated that as of August 9, a company or consortium can submit an expression of interest for the airline. Meanwhile, DGCA told the Delhi High Court that lessors should not be allowed to inspect the grounded Go First aircraft. It said that only Go First was authorized to maintain the aircraft. And the controversy surrounding Zee Entertainment takes center stage. Puneet Goenka and Subhash Chandra, promoters of Zee Entertainment Enterprises Limited, are expected to move the Supreme Court challenging the Securities Appellate Tribunal SAT order on Monday that dismissed their appeal over a ban by Sebi on holding board positions in publicly listed companies. In an order on June 12, Sebi had barred the father-son duo from boardrooms of listed companies over allegations of fund diversion. If the promoters fail to obtain relief from the Supreme Court, it could very well lead to the departure of India's first family of satellite television from the industry. The decision again puts a question mark over the Sony-Zee deal. And lenders have asked Space Mantra, the highest bidder for Future Retail, to further sweeten its offer of 550 crore rupees for the company. The lender's claims of 19,400 crore rupees were admitted against the bankrupt company. If they accept this bid, they will have to take a massive 97% haircut on their claims. As per news reports, this is a bad deal for lenders who had made claims of 21,000 crore rupees against the company, but the resolution professional only accepted claims of 19,400 crore rupees. The haircut will be one of the highest in insolvency and bankruptcy code IBC cases. In April this year, 49 companies sent their expressions of interest, and of the 49, only 6 companies, which were mainly scrap dealers, had sent their binding offers. Moving on, what were the big updates from the startup world this week? Let's find out. We open with EdTech. Byjus on Thursday named former State Bank of India Chairman Rajneesh Kumar and former Infosys Chief Financial Officer TV Mohandas Pai to a newly formed council to advise its board. While Pai has been among the early backers of Byjus through his family office, RN Capital, Kumar has helped payments firm BharatPe to strengthen its compliance and governance standards after one of its founders, Ashneer Grover, was ousted on allegations of fraud. Earlier this week, the government ordered an inspection into the account books of education technology company Byjus, which has been rocked by the resignation of its auditor and 3 board members last month. The Ministry of Corporate Affairs has sought a report in 6 weeks. The inspection follows an internal assessment of the company's state of affairs, and based on the findings of the inspection, the government will decide if the matter needs to be escalated to the Serious Fraud Investigation Office. The inspection would be a new headache for Byjus, valued at $22 billion in the last funding round, as it restarts negotiations to restructure its $1.2 billion term loan after breaching certain terms of its debt agreement. Now, according to news reports, hyper-local quick commerce player Dunzo has deferred up to 50% salary of some employees. Dunzo, backed by Google and Reliance Retail, deferred half of the June salary of its employees and the manager level and above due to cash flow issues. According to reports, any employee who gets paid 75,000 rupees and above have received only a part of the salary, and the rest is said to be credited before July 25. Reportedly, employees have also confirmed rumors of restructuring amid a cash crunch. In April of this year, the quick commerce company, after securing a substantial $75 million funding round from investors including Reliance Retail and Google, laid off 30% of its workforce. And that's a wrap on Companynama this week. We'll be back next weekend. But to get your daily corporate updates, watch Corporate Central Monday to Friday, or the Money9's daily dose on corporates and market. Have a safe weekend, and don't forget to keep watching Money9 and Money9 English.